You'll never be rich because you aren't doing things on a daily basis that are gonna make you rich. Me, I am. My name's Forrest. I invest in stuff and I think that everybody should too. Welcome to the channel. Last year in April, I started a brand new Robinhood account and I started investing $50 every day into that account. And then I eventually increased that to $60 every day. If this is your first time watching one of my videos, this is one of my weekly account recap breakdowns where I just show you what happens when you just do something every single day. My method of investing is simply dollar cost average, right? Dollar cost average. Let's actually ask ChatGPT a little help here. Take a little break. According to Google, dollar cost averaging is an investment strategy where you invest a fixed amount of money at regular intervals, regardless of the market price, aiming to reduce the impact of market volatility and potentially lower the average cost per share over time. That's what I do, okay? I just put money into VOO. What is VOO? VOO is the Vanguard S&P 500 Total Stock Market Fund. A lot of people ask me all the time, they say, Forrest. I woke up every day. I sent my kids to school. I sat down at my desk. I wanted to invest the money and I don't know what the heck to do. The first thing that you need to do is you need to open a brokerage account. I'm using Robinhood because it's very, very accessible. The second thing that you need to do is invest money into the S&P 500 on a consistent basis. That's VOO. Why VOO? Why do we want to invest in the total, 500 best companies in America? The biggest, best, I'm saying best, kind of just, this is just an objective measure of market cap, which is just the total value of the companies. It doesn't necessarily mean they're the best company by any other metric than that. But, I like butts. Anyways, what was I saying? But do that. Start investing in the S&P 500, and I'm going to show you why. Okay, the S&P 500, when we talk about making money over time, this is the thing that's going to make us a ton of money. So I'm going to go to my phone right now. Okay, we're going to close my text messages. We're going to turn on Do Not Disturb. We're going to go to investor.gov. I want you to open up your browser right now with me, and you're going to type in investor.gov. Okay, and then you're going to Google investor.gov compound interest calculator. You're going to get a screen that kind of looks like this. Okay, it's blue. And we're going to put some values in. Okay, let's assume that you've done nothing. You haven't even started yet, which is fine. My goal of doing this isn't to put you down. It's not to berate you. I know I did that at the beginning of the video. I'm so sorry. I'm so sorry. But from here, we're going to build together. Me and you and I, we're going to build together a little bit, okay? Your initial investment's $0, okay? You haven't started with anything, but you're going to do a monthly contribution. Now, we're going to do a bunch of different numbers to kind of show you the power of the math here, okay? So you're going to start with something very, very small. So it's going to be $100 in a month. You're going to find those $100. You're going to do it. I know you can. You're going to get over whatever hurdles you just came up, whatever pushback you just came up with in your mind. You're going to figure it out. You're going to come up with that $100. Now, I'm 34, unfortunately. I wish I was a little bit younger. I know I look good, but let's assume that I go to retirement age, which is 65. So I'm going to invest for 31 more years. Now, I want you to take 65 minus however old you are and do that. Now, if you're 65 or older, go ahead and just do 10 years, right? Let's just assume that you're going to keep living. Okay, you can do however long you want, honestly, in this. I'm just going to do 31 for the sake of example, just for retirement age. We're just going to anchor this, assuming it is a retirement account. It doesn't have to be, but we need some parameters. Now, estimated interest rate. This is an important value that you don't want to mess around too much with. I always do 8%. Okay, you can do 8 to 10%. Now, if you do 10%, the numbers at the end are going to be bigger. If you do 8%, they'll be smaller. If you do 5, they'll be smaller. 8% is a good number to assume based off of the historical performance of the S&P 500. You can leave the interest rate variance, chill, leave that annually, and then go ahead and hit calculate. Cool. So if I do $100 every month, which isn't a ton, by the time I retire, I'll have $148,000. Now, the first thing that you're saying is, Forrest, $148,000? That's not that much money. I can't do that much at retirement with $148,000. Well, imagine if you had $0. Okay, so let's do another number. Let's go ahead and change from 100 to 500 and see what happens. $500, hit calculate. Now I have $740,000. Now let's do the amount that I'm doing in the account. Well, we'll get there soon. Let's do 1,000 first. So we're gonna go ahead and type 1,000 in. I'm gonna scroll down, hit calculate. If I do $1,000 a month, I have $1.48 million. If I started today, I'd still be a millionaire. Even with inflation and everything, I still have $1.48 million cash in an account. Now, the amount that I'm actually doing basically comes out to $1,200 a month. Okay, $60 a day. 6 times 5 is 300. 300 times 4, there's 4 weeks in a month. 3 times 4 is 12. $1,200. If I hit calculate, That's going to give me an amount of 1.776 million in 31 years, starting from zero. Now the account today is actually at like 11,300. So I'll change my initial investment to that. We'll scroll down and it's 1.89 million. Look how much that jumped up just because of that initial investment change. Now, zoom out a little bit. Okay, and we're gonna look at the account breakdown here in a second, but this is the reason that I do this, to show you this time, compound interest. Let's ask Google what the definition of compound interest is, okay? What is the definition of compound interest? What is it? Okay, there's actually a definition on investor.gov. Compound interest is the interest you earn on interest. This can be illustrated by using basic math. If you have $100 and it earns 5% interest each year, you'll have $105 at the end of the first year. Makes sense, right? At the end of the second year, you'll have $110.25. So not only did you earn $5 on your initial $100, you also earned 25 cents on those $5 that you made in the first year. While 25 cents may not sound like much at first, it adds up over time. Even if you never add another dime to that account, in 10 years, you'll have more than $162 due to the power of compound interest. And in 25 years, you'll have almost $340. So what's really, really cool about compound interest is that time is just going to grow your money. This is why the rich get richer. It's the primary reason why the rich get richer. Once you have enough money, you'll just be generating money. So let's go ahead and change our time span from 31 years. Let's assume that I started earlier. Let's change this to 40 years and see how big of a difference that makes. So just by adding 9 more years to this, the value of the account almost doubles. Okay, it went from 1.8 to 3.9. It basically doubled. Okay, if you're younger than me, you're someone in your 20s, let's just say 50 years, okay? Let's say you start a trust and you're not even doing this for yourself, you're just gonna do this forever. Okay, now you've got basically $8.8 million. So investing, saving, so important, guys. We'll change the monthly contribution, we'll double it, okay? Let's mess around with these numbers. Now I've got $15 million that I've got. The power of investing, and I accidentally stopped recording my screen. So what we wanna do is we wanna record our screen again. 3, 2, 1. We're recording and we're going to go to Robinhood and let's take a look at the account so far. Now we're almost on the 1-year anniversary of doing this. The market is down right now. The cool thing about the market being down right now is that I'm getting really good buys. Okay. If you think about what it means when the market is red, a lot of people freak out, but you're getting things on a discount. You need to think as when stocks peel off, you're getting them on a discount. That's where all the big gains come from. If you buy at the highs, you're going to get essentially the worst prices. So you want to be buying these lows. And if you're dollar cost averaging, in my case, I'm buying every single day, you're always going to get the best prices. Technically, I'll get the worst prices, but I'll always get the best prices too. So I mentioned you need to buy VOO. I have some other stocks in here. These are holdovers from when I first started this. I have a community and I basically just had them telling me what to buy. And I've filtered it down almost all back into VOO, and I just have some holdovers that I like and I think are okay. My core position is VOO. I have 16.63 shares. We'll open this up. It's currently Sunday, so the market isn't open. Okay, now here, 16.62 shares, market value $8,596.98. My average cost, so that means after dollar cost averaging in, doing buys, the average of all of those buys is $531.32. This makes up 75.39% of my portfolio. Okay, and at market close on Friday, I was up $165. My total return on this position is negative $238, which is fine. So I'll keep buying, I'll keep lowering my basis. So my average cost is going to go down because the market is down right now, which is really, really powerful. So if I could push my costs down, and let's imagine in a few years, the value of VOO isn't $516, it's $1,000. Okay, so by lowering my basis, I'm making more money. That's why dollar cost averaging is so important. That's why it's so important not to try to time the market and to just have as much time in the market as possible. Let's see what is in this ETF, exchange traded fund, that is VOO. Okay, and again, this is the thing that I recommend that everybody be buying. So we look at the holdings, 31.99% of it is technology, 13.61% is financial services, 11.6% is consumer cyclical, 10% healthcare, another 10% basically communication services, etc., etc. Okay, you can see the full breakdown there on your screen. Let's look at the top 10 holdings by ticker. You can see that we've got Apple, Microsoft, Nvidia, Amazon, Meta, Alphabet, Tesla, Broadcom, Alphabet Class C, and Berkshire Hathaway. So some double dipping on Alphabet there, which is interesting. I'm surprised I did that. I actually didn't know that. I just learned something while I was making this video. Very cool. So in terms of, catching the big gains, it's good to know what the holdings are. Again, this is across the entire market though. It's automatically managed. That's what an ETF is. So I'll keep buying into this. We'll take a look at some of my other positions. Palantir had a nice run and then it peeled off, went up to 125 and then peeled off. It's at 86. See, I'm up $200 on this position. Total value $289 there. Let's look at Nvidia. Okay, Nvidia market value about $1,000. I'm up $8 there. Okay, Microsoft $236, down $5 there. TSM, Taiwan Semiconductor Manufacturing, up $7. Total value $60. SoFi up $43, market value $100. MicroStrategy, total value $80, up $42. And Rivian. Okay, I really like Rivian. I'm very bullish on Rivian. I should do a Rivian video. I really like Rivian, especially as Tesla positions themselves worse and worse in the zeitgeist, I guess. Elon is not as favored as he used to be. I really like Rivian. They're an American company. I'm a patriot. I am down $244 on that position, though. They need to get their stuff together. I'm kidding. But this is a long-term account. So this thing actually peaked at a little over $12,000 at some point. For whatever reason, my Robinhood total, like this value tracker has never been correct. And that's because I think at some point, I don't know why this is, I had a couple $100,000 in this account that I since moved into other accounts when I started trading. I don't know why it's not correct, but this definitely peaked. I think I have a video where this was over $12,000. So I don't really know what's, oh, here it is. Yeah, okay. So it's not broken in this case. It was up to like 13,000. Okay, cool. So you can see how, you know, this will go up and down. That's why I started this account. Don't freak out when you see the red. Red is good. Red means buy. Red means buy. You need to train that into your brain. Drill it into your brain. If you found this useful, please subscribe to my channel. Check out the other videos in my macro show, my podcast. The podcast is called Your Relationship with Money. So check that out. I interview people, try to figure out their relationship with money. And if you want to be somebody who can actually retire and change the narrative for your life, change the narrative for all the people who come after you on this little blue marble floating around in the universe, then you need to take action now. Stop waiting for the perfect moment. Right now is just fine. Okay, market opens tomorrow. This video is not coming out tomorrow, but whenever you see this video, market's probably going to come out, or the market's probably going to be open tomorrow. So start investing, do something, open an account, even if it's $5, even if it's something super duper small. And you're like, man, this guy's doing $60 a day, but I can only do $1 a day. Okay, do $1 a day. You are infinitely further ahead than everybody else. It's not a competition, but we might as well measure a little bit. You know what I'm saying? In any case, my name's Forrest. I invest in stuff. I think that you should too. See you in the next video. Subscribe. Peace.